Hello, I'm Yutaka Watanabe, a tax accountant. This is the channel Tax Accountant Nabe solves your money problems. Today, I will talk about omitting sales will definitely make you a target for a tax audit. The theme is quite directly the devastating reality of omitting cash sales. If you run a cash-based business, you may sometimes think maybe hiding just a little bit will not be discovered. Behind that small temptation lies a risk that can truly become fatal for your business. Today, we will take a deep look at that point. First, let's speak frankly. Business owners may have thought at least once, somewhere deep down, if all transactions are in cash, maybe I can hide sales from the tax office without being found out. Because cash doesn't leave clear data, like bank transaction records. It may be tempting to think maybe I can get away with a little, or they probably will not find out. I can understand why that temptation might arise, but reality completely shatters such naive expectations. So, how do people actually try to hide sales? There are two typical fraudulent methods that are often seen in practice. The first is physically throwing away slips or cash sales. It is an extremely old-fashioned and simple idea. If you tear up and throw away the paper evidence, the fact itself will also disappear. The second is a pattern where money that should originally go into the company is secretly transferred into the president's personal bank account. In short, by deleting records or replacing the destination of the money with somewhere else, they try to make it appear as if the sales never existed in the first place. This is clearly classified as an international and malicious act. Now, this is where things become truly frightening. No matter how confidently a business owner thinks, great, I have hidden it perfectly. Tax auditors can easily see through that illusion. These acts of concealment or disguise are highly likely to be discovered during a tax audit. This is not a lukewarm story, like maybe it will be found out if you are unlucky. Tax auditors are professionals among professionals. They absolutely do not overlook even slightly unnatural money flows or tiny inconsistencies in the numbers. For example, if the profit margin is unnaturally low compared with other companies in the same industry, or if the business is in an industry with many cash sales but the amount of deposits recorded in the books is slightly low. Those small irregularities can trigger the auditor's attention. In addition, recently, false register data and electronic payment records are also being cross-checked in detail. So, it has become much harder to get away with deception than before. To state the conclusion, it is better to assume that omitting sales will definitely become a target of investigation and will eventually be discovered. Then, what do you think happens if it is discovered? This is not a lenient word where you can simply say, "Oh, sorry, I will pay tax I failed to pay," and be forgiven. What a wait! You, there is an extremely severe penalty known as heavy additional tax. This is on a completely different level from a simple late payment charge. It is an extremely strict penalty imposed for intentionally carrying out acts of concealment or disguise. The tax rate for heavy additional tax is set much higher than ordinary additional tax for reporting, and it may be further increased depending on the maliciousness of the concealment. In other words, on top of that tax that should originally have been paid, an even heavier penalty is added without mercy. The price of trying to save just a small amount of tax can later become unbelievably expensive. Moreover, this creates the worst kind of snowball effect. From the moment the fraud is discovered, the situation starts rolling downhill rapidly. First, there is the double blow of the original tax and heavy additional tax. Then, what happens next? A large amount of money suddenly flows out of the company. So, naturally, the company's cash flow becomes tight all at once, and the foundation of management starts to shake. And what awaits at the end is not merely running out of the money. The company may completely lose its social credibility with banks and business partners. For a company, this is truly fatal and extremely difficult to recover from. Depending on the case, it may even lead to criminal accusation. If the scale of the fraud is large, it will not remain merely a tax violation. It may be treated as a crime called tax evasion. Therefore, the most important thing I want to tell you in this explanation comes down to this. Knowing the certain fact that you can never escape the net of a professional tax audit. Please think about it carefully. You hide a small amount of immediate cash and feel as if you have gained something. For that momentary illusion, you press the switch on a trap that tightens around your own neck, destroy the company's lifeline of cash flow, and ruin all the social credibility you have built up through years of blood, sweat, and effort. Is that really worth taking such a risk? The answer is obvious. Without even thinking about it, correct knowledge and proper tax treatment without deception are, in the end, the strongest shield protecting your precious business. Facing your numbers openly and honestly should become the foundation of a business that continues to be trusted for a long time. Please never forget this. Today, I talked about omitting sales will definitely make you a target for a tax audit. For more information about tax audit, please also visit the page of Yutaka Watanabe, Tax Audit, Tax Accountant Office. I will continue to talk about themes related to money. So please subscribe to the channel. Tax Accountant Nabe solves your money problems.